Hello and welcome. My name is Alex Romero from GASB Learning Solutions. In this week's Genuine Learning blog, we're diving into the GASB's preliminary views on severe financial stress and probable dissolution disclosures. A preliminary views document is issued early in the standard setting process, especially when the board anticipates differing perspectives and responses from the public, or if the board itself is sharply divided on the issues. It outlines initial perspectives and seeks broad feedback before moving forward. In this case, the board is exploring how governments should disclose the conditions of severe financial stress and probable dissolution. On March 19, 2025, the GASB issued a preliminary views document titled Severe Financial Stress and Probable Dissolution Disclosures. This preliminary view document explores new disclosure guidance that would apply when a government is experiencing severe financial stress or is facing that probable dissolution. The GASB is specifically revisiting how going concern issues are currently addressed and reevaluating whether the current framework is truly appropriate for governments. Right now, the guidance for going concern comes from GASB 56, which was adopted from older AICPA standards. The guidance was not created specifically for governmental entities, nor is it significantly modified for governmental environments when incorporated into Statement 56. Under the current rules, a government has to look at whether there's substantial doubt about its ability to continue operating for the next 12 months after the financial statement date. One of the key issues with this current guidance is whether the going concern indicators are truly appropriate for state and local governments. In practice, it's extremely rare for a government to cease operations even when these indicators are present. So that raises an important question. What should we be using instead to flag those severe financial stress in governments? And just as importantly, what do users of the financial statements actually need to know when a government is under that kind of financial strain? As you go through the preliminary views document, you'll see these two acronyms come up frequently. So it's important to know what they stand for. We have SFS, which is for severe financial stress, and PD refers to probable dissolution. The preliminary views is split into two key areas, your severe financial stress and your probable dissolution. Now, your SFS guidance focuses on the government's financial condition, regardless of whether it's going to continue to exist. In other words, the government might still be operating, but its finances are in serious trouble. The PD guidance, on the other hand, is all about uncertainty of a government's continued existence, even if its financial conditions doesn't look too bad on paper. SFS is all about the government's financial condition as of the financial statement date. It's a snapshot in time of how things really look. Importantly, the government isn't required to project its financial health into the future. PD, on the other hand, looks ahead. It's about the uncertainty regarding the government's continued existence. Financial statements assume that a government will continue to operate. So if there's significant uncertainty about that assumption, users need to be informed about this. So in short, SFS is about your current conditions, while PD is your future uncertainty about existence. This slide gives us an overview of how the preliminary views document is organized. It's broken into chapters that will walk through the relationship between your severe financial stress and probable dissolution, how to assess each condition, and what disclosures are required. You'll notice that there's a clear separation between evaluating the condition and the disclosures that follow. This structure helps clarify when each set of guidance applies and what information needs to be communicated to users of the financial statements. The preliminary views document offers examples of what might indicate severe financial stress as well as what really won't qualify. So it's helpful to review that list, especially if you're planning to submit comments to the board. The proposed threshold for SFS is set very high, at or near insolvency. That means the government is struggling to pay its obligations as they come due, but it hasn't necessarily stopped paying yet. The board emphasizes that being near insolvency reflects a level of financial stress just shy of full insolvency. Importantly, this assessment is not tied to whether the government will continue to exist. It's purely about the financial capacity. The board has proposed an obligations-based approach, meaning that the focus is on the government's ability to meet its financial obligations in the short term. So when a government meets the severe financial stress condition, it's required to disclose several key elements. First, the reasons and causes behind this condition. This could include significant events or financial challenges that led to this stress. Next, the government must share its evaluation of the significance of those causes. How impactful are they? It also needs to describe what actions have been taken in response to the conditions before the financial statements are issued. What steps have they tried to take to address these situations? And finally, what are the known effects of the condition? Things like a credit rating downgrade or receiving support from a state-level oversight program. There's also guidance for governments that made severe financial stress disclosures in prior years. If they're still in that SFS, they need to update those disclosures to reflect the current situation. If they're no longer in SFS, they should explain how the conditions were alleviated. For the probable dissolution disclosures under the preliminary reviews, a government would be required to disclose PD information if it's probable that it will cease to exist as a same legal separate entity within 12 months after the financial statements are available to be issued. Importantly, this applies regardless of financial condition. So even a fiscally stable government would need to make these disclosures if there's a merger or dissolution or a similar event is likely. This guidance is meant to cover all forms of dissolution, not just bankruptcy, but any legal or structural action that would result in the government no longer existing as that separate entity. So how does a government determine if probable dissolution applies? Well, the preliminary reviews proposes that governments evaluate all the relevant factors in the aggregate, not just a single event or indicator. This means looking at the full picture, legal actions, legislative developments, financial pressures, or any formal plans underway that could result in the government ceasing to exist within that 12 months. So if a government determines that a dissolution is probable, it must include specific disclosures even if it also meets the severe financial stress conditions. However, the ultimate goal here is to avoid those unnecessary duplication between the two sets of disclosures. So the required PD disclosures include a statement confirming that dissolution is probable within that 12 months of the date the financial statements are available to be issued, the reasons and causes for the dissolution, including relevant conditions and events, the government's assessment of how significant those reasons and causes are, any actions that have been taken in response to the probable dissolution before the financial statements are issued, and information about the assets and liabilities, such as how they might be recovered, reclassified, or disposed of during the dissolution process. If the government made similar disclosures in the prior year and dissolution is still probable, those disclosures must be updated to reflect the current reporting date. If the dissolution is no longer considered probable, then the government should explain why its evaluation has changed from that prior year. So how does this improve financial reporting? Well, it creates a clear distinction between a government's financial stress and its potential for dissolution. Right now, that line is kind of blurry and users may not fully understand the risks. It also helps clarify when disclosures are required, making the guidance more consistent and easier to apply. It also promotes comparability across governments. Users will have more consistent and transparent information, especially in times of crisis or transition. Ultimately, these disclosures aim to give financial statement users the information they need, whether a government is under that significant financial stress, facing possible dissolution, or both. So that brings us to the end of the overview, and now it's your turn to weigh in. The GASB is accepting comments on this preliminary reviews through June 30th, 2025. Today, we've provided you with just a high-level overview, but there is more details in the preliminary reviews document. So I encourage you to read through it and consider submitting your comments. Your feedback is incredibly important to shaping what happens next. We have a link to the preliminary reviews in the comments below, or you can access it on GASB's website. Thank you again for joining me today as we explored the GASB's preliminary reviews on severe financial stress and probable dissolution disclosures.